Welcome to Merill Talks. With the Trump administration returning to the forefront, all eyes are on the new U.S. Treasury leadership and its economic agenda. Following the success of our earlier video, thank you to our audience for your constant support. We appreciate it. Do not hesitate to visit our LinkedIn page and our website, merillfunds.com. Today, Marc will be with us as usual to decrypt the new Trump 2.0 administration, and Scott Bessent, a 62-year-old ex-chief investment officer of Soros Fund. He managed from 2011 to 2015. Welcome, Marc, and even if this is your first time with us, Marc has managed money from 2 decades, from Geneva to London to now Valletta in Malta. Before we start our journey, we do not provide any recommendations here. Do your own homework. As usual, the disclaimer will be at the end of the video. Let's get into it. So, Marc, welcome.
Hi everyone.
And before we get started discussing US policy, who is Scott Bessent?
So Scott Bessent is very well known by the market because he's the founder of hedge funds called Key Square, actually. And he was also, as you said, the ex-CIO of the Soros Fund for about 4 years. So he's a man who knows quite well the macro landscape. He's also an interesting person from a personal perspective. Why? Because he's graduated from the Naval Academy, but he's also openly gay, which is interesting things because, as we know, U.S. Trump has been criticized for his positions for the gay community. Now, just a little bit of background of Scott. Scott grew up in South Carolina, and his father was a real estate mogul. So he knows very well how risk it is because his father passed difficult time, boom and bust kind of cycle.
So, Marc, we're European. We refer to these type of people as the finance minister. Why is it in the US that we refer to them as the US Treasury?
Yes, thank you, Mike, for this question, and I think our audience will be interested to know why. Back to 1789, when they established the central bank, was the policy, one of the founding father, which is Alexander Hamilton, which is a very strong believer on the federalism, set up these things and enlarged the policy. So, as you know, I grew up in Switzerland, and we are actually federalism. It's a very important thing. I mean, I know the majority of Europe, it's not on these directions, but US get inspiration from there. I think it's important to know where there's the counterpower, how the Fed, and especially at the moment, there's a lot of discussions about how Jerome Powell will keep his seat after 2026, because as we know, Trump is quite vocal, making a lot of pressure to cut the rate, and we will see probably in December if they keep on hold the rate. But again, here, I think it's very important to understand the role of U.S. Treasury Secretary, especially previously, or still on, I will say, Yellen. She was at the Fed, and she still remained until the 20th of January, the U.S. Treasuries. And she has a very important role because she was in charge after COVID until now to set up the agenda. So he has quite an immense task to do, but I think it's good to discuss a little bit more in detail for you to decrypt what his view and how, as a global investor, and like I say, he's a global investor in the way like he's a hedge fund manager, we will discuss later on these things.
So, Marc, from what we've observed, could it be that the US's trajectory learns its lessons from the Far East?
Definitely, Mike. As we know, Scott, as a fund manager, he was like very strong convictions was on Japan and the structural change. That's why we need to discuss about Shinzo Abe, who was assassinated as a prime minister, and it was probably a long reign as a prime minister. Why? Because he was implementing the famous 3 arrows, and he took out his country after 30 years of deflations into an inflation path, which is fantastic. So I think Scott, who has been like very convinced about to invest in Japan after the policy of Shinzo Abe, he will learn how to do the things. And I think he has as an investor, as a global investor, he can see and perceive the policy in the long run. So it's interesting also to see a hedge funds manager to be now on the other side, understanding, because when he was a fund manager, he still remained a fund manager until the 20th of January, he was trying to find the inefficiency of a lot of government, and like many famous hedge fund manager. So pushing in these directions, probably he will know where not to make any mistake. And I will say Japan has high debt, and it's a big concern at the moment, the level of the debt. Especially we discussed on our previous video about France and the level of debt, which is above 100, compared to normally the norm, which should be 80 for the European countries. That's the point. So I think we need to observe this, because having such a heavy debt without any war or whatever that you need to finance, and I will say the U.S. economy is really quite resilient and in good shape. So I think the market was quite concerned at the beginning, and that's why after the 50 basis point cut of the Fed, the rate went up big time, especially the long-term rate. It was more like a concern regarding the deficit and the potential high deficit. And as we know, on the Trump 1.0, deficit went to really skyrocket. And that's why I say, did the Trump 2.0 will go in the same direction?
So Marc, considering Bessent's recent interviews, what can we tell from what he's saying about Europe, especially France and Germany?
It's an interesting and another interesting questions. I mean, as you know, on the previous video, we have been quite vocal about the trajectory, the potential trajectory of Europe, how's the problem, the structural issue in France on the political side, but also in Germany, the disindustrialization of Europe. So I will say Scott has the same view. He was betting on that direction. He's really, really concerned about France, that Marine Le Pen will go into the power when Macron will left the place. And I think he's got a point here. Now at the moment there is a trial, so Marine Le Pen potentially will not be the next president because there is a trial. Now Jordan Bardella will be potentially the new president. He's very popular, he's young, and he knows how to speak to the people. So clearly here there is a major issue, he's aware. So again, we need to monitor closely because Trump administration's 2.0 will continue what Trump 1.0 did. So a war, a tariff war, which is, like I say, a commercial war. I mean, it was quite clear for China on this direction. They will continue where Biden started, semiconductors, electrical vehicles, etc., etc. Now for Europe, it's not yet clear, but knowing that Scott knows quite well the macro landscape in Europe, I think he will be maybe, I will say, more delicate, because we can always imagine, yes, Trump is like really hardcore, he's going on that side. I think we shouldn't be judging Trump 1.0 with the Trump 2.0, because with Scott handling this kind of discussions, I think it's good, because he understands the weakness of France, he understands the weakness of Germany, and obviously US, of course, want to rise as a phoenix as usual, but they want also partner, and they need some economic partner, especially if they want to decoupling from China, which is probably one of the reasons Trump was elected, scared about how's the future of China, how's they taking the job, etc. So he get a lot of votes coming from this direction. So definitely, I think this Trump 2.0, we should be more like not so concerned as European, because probably Scott will manage in a proper way, not like we shouldn't judge the Trump 1.0, who was quite hardcore on this direction.
So, Marc, with all this being said, the famous growth and debt idea, how do you think Bessent will balance this?
Yes, definitely it's a big dilemma for him, and he has to manage it. But like I say, he will go probably in the traditions like Reagan did. So the objective is very simple: tax cut, deregulations. I mean, we saw the impact already on the cryptocurrency, like Bitcoin approaching 100,000, which is really a milestone. And I think reducing government spending, that's the most question here. On the military side, he's an ex-military. Scott is an ex-military on the naval side. I think it will be interesting to see how the things develop, especially in the Pacific, but also for us in Europe, because this is the big questions. How Trump will solve the problem of the war. I mean, we have been incapable here in Europe to solve this issue. We don't have the capacity to respond to Russia. That's the reality. We don't have any proper army to defend Europe in this case. So I think we need to monitor closely on that side. But I think what is important to come back on the economic perspective, I think it will be like a Reagan, we say Trump 2.0, but I think it's probably be a Reagan 2.0. In this case, like I say, tax cut, you want to reach 15%, really pushing the economy in US. So as usual, as you remember, we have been very vocal how the US economy is resilient. And I think it's important to really focus on the domestic things, like regional bank, pipeline operators, all these type of things. As an investors here in Europe, we are not familiar at all, that's for sure. So we need to put on our shoes as a US investor if we want to survive the next year. There is no doubt about this, because we need to understand the mindset there and what kind of things, and obviously oil will play a major role, shale oil, etc., etc. And that's something new us as a European.
Finally, Marc, my last question is the rise of the Republican Party. What is this? What are we expecting? What does it mean?
I think what is interesting here this time on this Trump 2.0, I mean, he appointed a lot of people who are really, really good, I will say. And it's like, you can feel like the Trump 1.0 was like a surprise, completely disorganized, etc. I think this time everything is well organized, the Republicans are here, and they will push in these directions. I think we need to be really, I will say, focused on what's the development on the coming months. I will say the rising star was the tech. I will say the Silicon Valley guys. But as we know, the Silicon Valley guys, they are more like Democrat. So it's important to see what's the future, and especially with, think about a lot of people who move out from California to Texas. And Texas, as we know, it's an oil producer, and it's like a pro-Trump state, the opposite of California. I think people have been quite disappointed, and especially California is a failure maybe of the Democrat on that side. So again, I think we need to be focused on the sectors, and especially in which sector will be the next one. And I think it's important because potentially I will say the tech have been like the rising star, but I doubt going forward that the tech will continue. So we more think about cyclical stocks in this case, because for sure deregulation will have an impact on that side. And of course is like a pro-oil. So we can imagine with these new administrations 2.0, we can expect a mini boom in US. Now, the problem is the impact globally, the decoupling with China, the regulations that will have impact in Europe. And as we know, France, Germany, quite in a difficult situations. I think we need to also to monitor closely UK, because as we know, traditionally UK is quite close to US on an economic perspective. But that time with this new Labour government, he went into the directions of Europe, especially on the military side. So I think it's also very important to see what kind of dynamic here. But I think we will be surprised by this new Trump 2.0, because the momentum could be quite interesting and quite pushy, positive catalyst here. I know we are facing another stretch stock market, which could be a concern. As you know, we have been the advocate of the fixed income, but be cautious in US on the fixed income side. I think the path is quite clear in Europe, and the ECB will be obliged to act and not remain passive like last time compared to the Fed. And we will see what happens in December with the Fed, if they keep on all the rate or they will go on 25, and how we'll see in 2025. That's the position here, and I think we are monitoring closely on that side, but I think we should be surprised on the upside.
So we thank you very much as usual for joining us. The disclaimer will be popping up after this piece, but before that, do feel free to visit our website and even our LinkedIn page. Reminder, our website is merillfunds.com, and we look forward to seeing you at the next one. Thank you.